Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. And just a little disclaimer, nothing should be construed as financial investment advice, just my opinions, thoughts on the markets. And let's get into today's stuff. First thing I wanted to say, I just wanted to go back into gold, silver premium. I'm going to touch upon this real quick. I'm not going to really dig into it because I just don't know what I'm allowed to say publicly or not because I worked in the business. But generally, bird's eye view, they made a lot of really bad decisions, the bullion industry, from basically 2015 through 2000s. I mean, the bull market masked that. But when the bear market came, there's no one buying from them. So how it works is I remember I had some silver bullion and I called and silver was like 430 on Thursday or 440. And my price was 38 and then another did 38.60. So I'm like, all right, I know which one I'm gonna buy from. Sell to. There's two coin shops near me. But how it generally works is when you buy from a bullion, they go and they buy from a supplier, and that supplier, they get their stuff from the mints, generally speaking. And yeah, the mints would they would get their stuff from refiners and mines. And so generally there's a huge supply chain going through. And the reason before you could get stuff at spot, or if you were selling Silver Eagles to these companies, you could buy it. You could sell it to them at a premium to the spot price based on I don't know that you can now. But when I was there and when I followed it, I stopped really buying bullion in 2018. But so I went to go look to, I mean, I was just shopping. I don't think there's really a top yet, but I just sort of want to figure out where I'm going to sell to. And anyway, long story short is because there's no retail market and no one buying anymore. It used to be you could sell it and we would just turn around and sell it to another client. Like the retail industry was a middleman. The thing is you had to go find that person. So I guess you could wait outside the store to sell and then just say, "Hey, you want to buy this at spot?" And like, I mean, I guess you could have done that back in the day. You go coin shop, but a lot of times people bought online, so you were selling to like JM Bullion or Atmex or wherever. And so, but now that no one's buying from them, the only people they can sell to are the wholesalers. And since no retailer is buying from them, only people they can sell to are the mints or the refiners. And they're all selling, I mean, the mints and refiners, they're selling their product at spot and a premium. So they're only buying at spot. So they're going to be the final buyer of that metal you're selling probably right now is buying at spot. So unless you can get to the mints or refineries direct, it's hard to find that spot because no one's buying from the retailers. It used to be, when I was there, even though it was during a bear market from 2012 through 2015 or 2014, I didn't really. Oh yeah, 2012 through 2014, almost 2015. But it used to be. I remember one time I had someone sold me 10 maple leafs, gold maple leafs, and we could sell them to a client immediately. But now no one's buying. So that's what is happening now. So that's I mean that's why you can't get the premium because you're selling it to a retailer and they're selling it to a wholesaler and the wholesaler's selling it and there's no actual retail people buying. So they're all buying, and so that's what I think's happening, and that's why you can't get anyone near spot because no one's actually buying from the stores. The only people are calling in to sell. So anyway, uh, I just wanted to. I saw this on an interview, but I wanted to give my expertise. Let's get into today's data. This is a big thing. Non-farm payrolls. The U.S. economy added 911,000 fewer jobs in the 12 months through March of 2025 than initially reported. Largest downward revision since 2000. Nearly all sectors. And this just goes to show how bad the economy is, how all these job numbers are way, way overstated. There's an upward bias in the BLS that needs to be taken care of, and it just goes to show they cannot hide how bad the economy is anymore. The economy is horrendously bad, and I don't think it's gonna stay that way. The jobs are gone, and I mean, as someone who's in the I guess accounting, financial industry, whatever you want to call it, I can say I had a much easier time finding a job 2 years ago, or even last year, than I did now. Now the jobs are they are gone. Like I don't know where they went. I don't know where. I know where they went, but I don't even think it's AI. Like a lot of people think it's AI, but you can tell, look, they are not. Inflation expectations 3.2%. They can't hide it anymore. They can't. It's gotten to the point where I was listening to a TikTok video. 200 people applied for a Sephora job, but Americans won't do crappy jobs. A Sephora part-time job with no benefits. 200 people. So, this is a flooded labor market, an excess. So, anyway, yeah, the economy is it's horrendously bad. And that's why I think the Fed probably will cut rates. I don't know if they're going to cut it that much, though. I have a gut feeling. I can't say that they're going to do a 25 basis rate point. I think they want to do a hawkish cut because, and of course, the Fed's not, taking the task on why did you say the labor market's strong? Look how bad the jobs and look at it. Last year it was 818,000. So the economy is dying. I think the equity markets, only a matter of time, will follow because all these companies, how are they going to get revenue? There's no one. There's no one that has jobs to buy their products. So the other thing, this actually got my thing. So when they say deregulate, it's one of the biggest cons out there. So here it is. Look at this. This week, Financial Times reported Avi Gilbert, who's a very good. He's smarter than I am. Very good analyst, one of the better ones out there. I follow him. I follow Jordan's also up there with Avi Gilbert, Jordan Royburn. But anyway, banks are hiding how much trouble they're in. I think this week. Financial Times reported new rules set to take effect in the autumn. Yeah, I know I skipped words. Will allow banks to hide troubled loans, conceal signs of distress in their lending portfolios. No longer have to disclose the total outstanding amount of loans that were modified to keep borrowers from falling behind on repayments. Instead, they only need to report the last 12 months. And this is what they mean when they say we're going to deregulate. They don't get rid of the ominous regulations oh yeah, the lemonade stands being cracked down on. And let me see if I can find it. Let me see if I can find. Uh, Now, granted, these are local regulations, but this does happen frequently. Most people don't know about it. Don't ask me how I know. But this is AI. Cracking down refers to incidents where children's lemonade stands are shut down by authorities due to local regulations requiring permits, licenses, and adherence to health codes. These crackdowns can result on families and issues inspired backlash. So, anyway, look at this. They're cute, but lemonade stands are completely illegal. So, when we hear deregulate, we're thinking of getting rid of these stupid regulations. But the reality is, be scared of deregulating because when they say it, they mean it. But this isn't what they mean. Cracking down. All right, we're going to get rid of these laws against the lemonade stands. No, what they mean is this, and that means that they no longer have to disclose their outstanding loans that are modified to keep borrowers from falling behind on repayments. Instead, only 12 months. This is what they mean: is that they're allowed to lie to you now. So I mean, yeah, call me a Debbie Downer or a Doomer or whatever, but show me in my facts where I'm wrong. And if you do, you're just trying to do a gotcha. You don't really. I'm not wrong. That's just the fact. So this shift makes it harder to track key indicators of portfolio health, since a high share of troubled loans can be an early signs of distress. So there you go. And I do agree with this. I mean, not just because I don't agree it. So the recent change will allow banks to hide bad loans is another blow to stability and depositors. And I do agree. Right here they can't hide these forever. It's only a matter of time before they are unable to extend bad loans. So look at this. Several changes that give investment banks latitude to engage in accounting maneuvers to lower their operational risks by reclassifying portions of trading losses as fee expenses. Like, oh my gosh. So So there you go. I mean, this is the banking crisis. I mean, it is going to happen. I believe it won't affect the markets until like a JP Morgan happens and whatnot. But yeah, so look at that. I mean, now banks they're doing anything they can to prop this asset market up. They're even allowing the banks to lie to you. And I mean, allow banks to hide trouble loans and conceal signs of distress in their lending portfolios. That's essentially allowing them to lie to you. So be very careful about where you bank now. I mean, I did subscribe to his safer banking research. I might do it again in the future. Just right now, I decided to not do it, but I'll probably be back uh, in the future. Right now, I might be leaving the United States soon, in a year at the very earliest. I mean, for personal reasons, among others, is why. I mean, I'm not going to get into all of them on a camera. So here it is. Worker confidence and finding a job hits new record low in New York Fed survey. September 8th. This is CNBC. This isn't Zero Hedge. It's not Alex Jones. This is CNBC. So yeah, I mean, anyone that lives in the real world, that lives in the real job market, knows the economy is horrendous and that the real numbers are zero or negative. I mean, I think at least dating back to January to February, all jobs numbers should have been at least zero or negative. And I think zero is being generous. So yeah, it is. Yeah, horrendous. Of course, I don't even blame it on AI. I think the economy's horrible. So, and then here's the other one, the McLuxuries, we can call it that. 78% of Americans now see fast food as a luxury, abandoning their favorite chains. So here it is, your McLuxuries. Rising costs driving away, decreased, whatever. So your McLuxuries are going away. And this is the other thing is everyone talked about hyperinflation and how we're not there yet but if you look at it, look at this. The rise of dynamic pricing. What businesses can learn from congestion in New York City. So now dynamic prices allows businesses to adjust prices based on demand, timing, and other variables. Strategy is gaining traction in various industries. So in the future, don't be surprised if you go to Starbucks and you're like, I'll come back for that cup of coffee and it's, 30 cents cheaper, more expensive. Transportation apps, restaurants, dynamic pricing is a key tool for optimizing revenue. So look at this. Business across industries are already exploring dynamic pricing. So they adjust prices based on day, time, cost, and demand for the product. So where does this go to? Utilities are doing it. Entertainment with ticketing systems for concerts, movies, fast food, fine dining. So New York City congestion. So we're already starting to have some of those Weimar type effects. I don't think we're close to hyperinflation yet. But I mean, if you look at it, it looks like if you look at everything, the bad job numbers, all that, the Fed's going to cut rates. And now are they going to cut rates? They're going to try to juice up the markets. Now, how much? I don't know. I think what they're going to do is 25 basis point, and then they say they're going to leave room for more cuts because I don't think they want to fully give in to the jumbo rate cut. I could be wrong. This is why I'm not, though, but they're willing to prop up these asset prices at all cost. And so that's why I'm not willing to bet against the stock market. Gold, I think silver is going to go to 50. It could correct now. But remember, there was a correction in April. Let's see if we can get the I might just do GLD. Because it's just simpler and easier. We'll do a 1 year. So where's April? Because April. All right, maybe this. All right, so GLD has no. I'm gonna have to go to Kitco. Let me see. Do I have? All right, I'm not sharing my screen, so. I'll get to Kitco real quick and I'll show you I need the chart so you can see my point and see why. So anyway, good. I can share this. And this is what I'm saying. Like we could have a correction now, but it might be like this. If you look at it here, this is right where I'm 3493. I think it was like around 3500. This is in, of course, they can't just. This is in like April 17th, right here. And then what happened is, see if we can keep going here, is then it went all the way down here, came back up, went down. And then it started coming. And all the way up till September, it corrected. But it was a very painless correction, and now it's made up. So I don't know exactly. This is a higher high, so I don't know exactly. But it could just go sideways some more and then go up. I'm not sure. I think the only time someone should really, in my opinion, the only time I'm going to really consider selling, and I mean heavily, is when silver gets around 50 or breaks it or trailing stop loss. Maybe I should have added some tomorrow, but anyway, it's not financial investment advice. These are just my opinions. There's a lot also I can't even if I was a financial advisor, there's a lot from your own personal thing I can't give you. Don't give advice on me. Don't base your strategy off of me. Like what I do, I follow some people and I don't base my strategy off them. Like I'm talking about news, which Avi Gilbert does not like. I talk about things happening. I factor other things, economic data that he just thinks is worthless. But I do check, see what his opinion is because if it goes with mine, it's like a vote of confidence. And now it's where it's me or somebody else, that would be my thing. Is like don't really look at it for strategy. You can just be like, all right, does this person? Oh, great, this person agrees with me. Uh, but if you're going to be blaming me or anyone for losing money, ask yourself this before any trade. If you follow, if you're going to blame me or anyone, then don't do it because it's not your trade and it's not your idea. It's not your like. That's what I do. I follow Avi. I follow Jordan, and I when I'm thinking something and I hear what they think, it gives me a vote of confidence. So it's like following the smart money. That's what it is. So anyway, remember, not financial investment advice, just my opinions. Uh, I'll see you next video.